Hello again, St. John Baptist Church. This is Al McClaney or Brother Al with another weekly stewardship video. And this week we're going to be focusing on, again, growing God's kingdom with the principle diversification. And as always, the disclaimer, no advice should be seen as a recommendation, as I am not a licensed financial advisor, and this is for educational purposes only, because I will oftentimes mention a company or a stock or even a particular vendor that you may utilize as a tool. So the biblical scripture of emphasis from Ecclesiastes 11 verses 1 through 2 and verses 6. So ship your grain across the sea. After many days, you may receive a return. Invest in 7 ventures, yes, in 8. You do not know what disaster may come upon the land. And in verse 6, sow your seed in the morning, and at evening let your hands not be idle, for you do not know which will succeed, whether this or that, or whether both will do equally well. And so this is introducing diversification. And some of you might have known, like I didn't know until I started really studying the Bible when it comes to biblical stewardship, that diversification is a biblical principle. And we're encouraged not only to invest, but to diversify investments. And some of those ways we do those could be in the form of mutual funds or exchange traded funds, which is what I'm going to talk about today. And last week we talked about mutual funds. And even in the way you diversify in your streams of income, it's often recommended that you have multiple streams of income, whether it be a business, like my wife has a business, we have a family business that she runs, is J9 Dainty Delights, where it's customized cookie business. And I consider my trading as a business. So that's the stock market. And some of you have individual businesses, some of you have multiple businesses. It's good to diversify, as well as some of them include nonprofits or collectibles. I remember a YouTube story of a teenager who was collecting Nike shoes and trading them. So that can also be a business. So in this particular video, I want to look at exchange traded funds. But before we get into that video, want to show how this week we're starting. And as I showed this slide last week, you can find it on earningswhisper.com. We're definitely in the thick of things when it comes to earnings. And last week were several major companies reporting. This week, we continue on because as we're 1 week from it being August 1st, we're definitely in the thick of them reporting what their second quarter earnings were. And so this week you can see major companies like McDonald's, Pfizer, Visa, major companies like GM, and companies, all the way to the end, P&G, which is Procter & Gamble. Amazon is a mammoth company. All of these, some of the larger ones like Amazon, will cause the market to move. So be aware of that. So I wanted to talk to you in this video with an emphasis on exchange traded funds. So I have a video that explains it. It's about 8 minutes. Or I'm sorry, about 4 minutes, that it will give you a background of an ETF or exchange traded fund.
An exchange-traded fund, or ETF, is an investment fund that trades like a stock. ETFs, like other types of funds, pull together money from investors into a basket of different investments, including stocks, bonds, and other securities. By spreading the fund's money into different securities, ETFs can generally provide investors with diversification, which can help balance risk. And because ETF shares are traded on the stock exchange, they're bought and sold like stocks, and usually incur commissions and other related fees. Just like there are a variety of mutual funds, there are a variety of different ETFs, each with different objectives. Some ETFs invest in a variety of stocks and bonds. Some replicate the performance of a stock index like the Dow Jones Industrial Average or S&P 500. And others track the performance of a particular market sector like technology or pharmaceuticals. However, different ETFs offer different amounts of diversification. For example, ETFs that focus more on specific sectors typically offer less diversification than those that are designed to replicate an index. Let's look at an example of investing in an ETF. Suppose an investor wants to make a diversified investment that is designed to mirror the performance of a major stock index like the S&P 500. After researching different ETFs and finding the one he wants based on his objective, he purchases shares of it through his broker, just like he would an individual stock. Now that he owns shares, the investor has a stake in each of the fund's basket of investments, while only having to purchase one ETF. Participating in the wide market with only a single purchase instead of multiple purchases can save an investor research and analysis time. So, how can an investor potentially achieve a positive return from the ETF? Similar to a stock, he can earn a return two ways: a rising ETF market price and dividends. Typically, if the value of the ETF's investments increases, so does its price. If our investor purchased a hypothetical ETF at $40 and a year later it was selling for $50, our investor could profit $10 per share by selling his position. Of course, if the ETF's price dropped, our investor would have lost money if the position was sold at the lower price. Because many ETFs are traded on a stock exchange, they can be bought and sold throughout the day. However, not all ETFs are widely traded, which can cause difficulty when trying to fill orders. Now, compare this to a mutual fund. Most mutual funds are only priced and traded at the end of the day. Separate from changes in price, our investor could potentially gain income if the ETF pays its investors a dividend, which is a payout of part of the fund's earnings and capital gains. Not all ETFs pay dividends. Many, instead, reinvest earnings into the fund's holdings. One of the ways to tell whether a fund pays dividends is to look at what's called its dividend yield. This yield is the amount that the fund pays out compared to the current market price of a share. ETFs have other attractive qualities. While most mutual funds require a minimum investment, which can be substantial, an ETF investor can just buy a single share plus any commissions and fees. Also, because most ETFs aren't actively managed, they typically have lower management fees than mutual funds. There is a wide variety of ETFs that attempt to track assets like corporate bonds, stocks in remote countries, commodities, and even currencies, among many other investments. While these assets carry unique risks, the ETFs that track them offer investors a practical way to analyze and potentially find opportunities in a number of markets. Want to learn more about ETFs and other investments? Continue exploring premier education brought to you by TD Ameritrade.
So as I said, even though I froze it on TD Ameritrade, I'm not advocating or saying you should use TD Ameritrade. There are several different brokerage houses out there: Charles Schwab, there's Interactive Brokers, some of you use Scottrade, E-Trade is out there. So several different ways, whatever you feel the most comfortable with and you feel that is going to make you effective if you open a brokerage account, which is what you would do in order to trade ETFs. And you can see the video, and you can always play this video back if you didn't get all of the aspects of an ETF. But it's just kind of like a mutual fund, but it gives you flexibility in which it could be traded throughout the day versus a mutual fund that it's at the end of the day, and you tend not to go in and out of those. And if that your style is to be a trader, which is you're in trades less time than say a long-term investor, there's nothing wrong with that. It's whatever you consider yourself comfortable with, or which you feel in the most important thing, make you profitable. So there are some people that say, oh, you shouldn't be in and out, you should be a long-term, or you should only do short-term trades. It depends on what is your goal, what's you're comfortable with and successful with from a profitability standpoint should be what you do. And I give you an example of my dad. He trades futures. The average time my dad may be in a trade may be an hour, if that long. There are other people that do options, and their average trade may be 3 days to 10 days. And then there are people who tend to do long-term, where they may have an individual stock that they're going to hold for years. No one way is right, and there doesn't mean you can't do both. So you may be a long-term trader, but yet you still do a portion of your portfolio with short-term trades. So there's no right way except the way that's comfortable for you and the way that's profitable, because that's the most important thing, that it's working for you. Okay, so let's take a look, as we always do, and this actually is an exchange traded fund we've talked about before. This is the SPY, which is the Standard & Poor 500 largest stocks. And eventually I'm going to redraw these lines because now we've kind of moved away. So I'll probably work on this next week and maybe redraw these lines. But this is the high from this year. This is the low from this year. And you can see we're still we were heading up, but we've had some challenges and some resistance, especially on like Thursday and Friday. Um, we had some market volatility. We actually ended the week down, or Friday was a down day. But in the end, we kind of ended up the same place we were at the beginning of the week. So let's take a look at QQQ, which also is exchange traded fund. You can see, as we talked about through the last couple of weeks, this has been leading us into the recovery. And those are typically QQQ are the technology companies. And you can see we still ended with several down days, but a little below what we started the week with. So we're still doing what we would call chop, going back and forth, but we're still above the high and historic highs of QQQ. So I've been talking to you about the exchange trade fund, and I'm going to use QQ as an example, or QQQ as an example. This is a great website called etfdb.com. And where you can do is you can go out to this website and in the section, go and put in the symbol to search box and pull up and put in QQQ. And you can see right here, I'm looking at QQQ holdings, and see within QQQ, it gives you the percent of the holdings in that specific company. So here we've got Apple, Microsoft, and you can see how here's the symbol, here's the name of the holding, Microsoft, Amazon. So you can see QQQ is going to move with Amazon, Microsoft, and Apple. Those are large enough to push that particular exchange traded fund. So if those are up, I mean, that's over 30% of it. Most likely QQQ is going to be up. If they're down, it's going to be difficult. And you can see here are the other ones: Facebook, Google L, and Google G, and Tesla. And Tesla has now has become a part of, I believe, the S&P 500 this week. So here are the larger holdings, and this gives the top 15 holdings. I just took a screenshot. I think it's about 12 of them here. Netflix, Nvidia, Adobe, PayPal, all of those are part of QQQ. So how can you use this? You can use it not only to look inside the ETF, but if you want more exposure, to say, you know what, I want to buy more Apple individually. So you can look inside of this and see which are the companies that are being exposed in QQQ, and use it to look at individual companies. So here's a reminder on why we do this. Again, we talked about last week building wealth, but also the fact that the more wealth that's in our hands as Christians, we should be following the direction of the owner. And who's the owner? Is the Lord. So 1 Chronicles 29:11 and 12 amplifies, says, yours, O Lord, is the greatness and the power and the glory and the victory and the majesty. Indeed, everything that is in the heavens and on the earth, yours is dominion and kingdom, O Lord, and you exalt yourself as head over all. Both riches and honor come from you, and you rule over all. In your hand is power and might, and it is in your hands to make great and give strength to everyone. So everything belongs to the Lord, including any type of wealth that we obtain belongs to the Lord. And so we always remind ourselves of that, as we highlighted the scripture last week in Deuteronomy, that he gives us the power to get wealth. And because he gives us the power, he's the owner of it all. And so I would be remiss in not giving respect to this week. We lost a tremendous and great icon in the civil rights movement, and Representative John Lewis, or as Dr. Martin Luther King Jr. called him, the boy from Troy. which tickles me to no end because I am from Alabama and proud to say I'm from the state of Alabama, and Troy, Alabama is, of course, one of the cities in Alabama. And one of the things I'm reminded of is they were reflecting on Bloody Sunday that happened in Selma several years ago. My mom and dad, we took a trip down to Selma, which was a location that as a child I went to. And I did cross the Edmund Pettus Bridge and took pictures. And we also went to where they had the memorial services at the Brown Chapel AME Church. We went there and did a tour. And so there's a couple of powerful quotes that John Lewis talked about. And he talked about getting into good trouble, necessary trouble. And I think of this, that we as having the opportunity to trade in the stock market, to own property, to vote, to participate in economic mechanisms through our country. These are the type of things that Dr. Martin Luther King and John Lewis fought for us. And so one of the quotes I'll end with is, if you see something that is not right, not fair, not just, you have a moral obligation to do something about it. So with that, St. John will end this week's stewardship video. We'll continue as always next week. Also, you can go out to the YouTube channel. You now can see all the different ones. So if you're receiving this link, you can go out, and if you want to subscribe, you can see all the different ones. I think it's about 23 or 24 of them out there now, and review them if you will. So until next week, stay blessed and stay careful in the market as always.